Good evening, everybody. Hey, welcome out to the weekly training webinar for tax sale support. I'm Ferre. I think I'm here with Steve Swenson. I think if audio is working okay, can you hear us okay?
Yeah, I sure can. Sure can. Everything seems to be working okay.
Excellent, excellent. Well, yeah, welcome out to the webinar. We're always happy to have everybody out. We cover different topics for the webinars, so if there's ever something that you want covered specifically, let us know. It's not unusual at all to schedule and to do a webinar for a topic that somebody specifically is interested in. So it's an easy way to get that done if you're interested. We were talking about what we wanted to do the webinar on, and there are certain things that seem to be that all the investors we work with seem to have in common, and at least all of the members that we have here, and certain things that seem to come up again and again, and the need for low dollar investments, ways that you can get started for a lower amount of money, ways that you can invest without having tons of money sitting aside there to invest. In other words, it seems like we have a lot of people that are looking for ways to get started with less than $5,000, or maybe even less than $3,000. Down to where people have maybe a few $1,000s to work with, and they want to see what they can do with it. And so, really, tax sales are perfect for this type of thing, and it goes right along with some of the best opportunities that are out there. So, yeah, we decided to talk about specifically today land investments versus other types of investments. So we're talking about tax deeds here. We're talking about buying properties outright. We're talking about investing in land, just basic raw land. And we want to talk about why not only is it a good investment, but why it might be the only investment you really need in reality, and why it may be the best secret, the best kept secret of tax sale investing.
Yeah, absolutely. I mean, there's a lot of advantages when we're looking at investing in land, be that commercial land, just a residential building lot, a large piece of land. And with some of the strategies that we can implement today, there's really no other investment that we can pick up for a cheaper dollar amount. Land gives us an opportunity to pick up it all across the country, and it's also a lot easier to sell. You're not going to have to be there on site or hire a contractor or do some of the different things that you would if you're looking at structured property. In addition with that, a lot of times it's overlooked. And so if we can pick it up for quite a bit cheaper than the same type of property in a same type of value with a single family home, then it's just going to make sense if we can make more on our money. Because as investors, we're looking at this as an investment. And so, that's the reason why me and Shade, I mean, even this year, we're still going to be doing Florida deeds and Florida homes because that's one of our strategies, but we're going to be dedicating a lot of this year to really building our portfolio of land all throughout the country.
Yeah, it is. Like I said, it might just be one of the best kept secrets in tax sale investing, and that goes for the small number of people that actually understand tax sales at all. Yeah, like Steve mentioned, he began to mention some of the different advantages that come with investing in land. And there are actually a lot of benefits or advantages that land offers. First we could say that it is easier to deal. It's easier to deal with than land with improvements, like for instance a single-family home. And the reason why we say that is because most often, or what would probably be the case if you're looking at investing, is out-of-state investing. Unless it's right there in your backyard, most of us are looking at investing out of state. And if you're investing out of state, it's much harder to do that, or at least there is more inherent risk doing that with a house or property with improvements than there is with land, because with land there's only so many things. I mean, the land essentially is what it is. With the improvements, we have to worry about so many other things with the property, and that also kind of leads into the next point with it, which is that land requires less capital. Um, that's another reason why it is easier to deal with than the nicer properties, and it gets overlooked, like Steve said. There are so many people sometimes going after just the homes, maybe, that the land gets completely overlooked. But the truth is that the vast majority of what is offered in every single tax sale is land. It's not going to be homes. In fact, the number of homes that we see now has certainly gone up, dramatically from what we first saw when we started paying attention to the brand new, the first online auctions. If we saw a couple of single family homes on a list, on a big list, that was, remarkable. And what we found was the number of single family homes, or the number of properties with improvements, steadily rose. But still, there's way more land than you're going to find of anything else. So that gives you a bigger selection to choose from, and that goes for whether you're looking at participating in a sale, or looking to buy it. That's another option there that you have with tax deeds like this with land, is that you're more likely to be able to find land like this over the counter somewhere. So you don't necessarily have to participate in an auction in order to find great property, because so much of it has been overlooked, because there's so much good property that's sitting on county records right now. And yeah, like Steve mentioned too, it's easier to sell. It's definitely easier to sell, and because it doesn't have it. Part of the reason why a real estate transaction seems like such a complicated feat to us is because we are used to dealing with mortgage companies and, or whoever the lender is, and the other party and their lender. And between everything that's happening there, it is a lot of paperwork. It's kind of a big mess. It is complicated when you have all these other parties that are involved. But when you own the property outright, and it's a tax deed like this for raw land, then transferring title is a very simple process. So selling it is easy to do. All you need to do essentially is just find a buyer. And there are so many different ways that you can look for buyers now. There's so many different ways that you can advertise your property now.
Absolutely, and kind of something just to butt in quickly, just kind of thought about, in addition to easier to sell and kind of less risk, when we're looking at homes, and I kind of first realized this as a brand new real estate agent, is there's lots of seller disclosure forms that are need to be filled out, and that you're going to have to guarantee the buyer a certain thing. Now, you can sell it as is depending how the deal's done, but there's going to be a lot more risk involved than just selling as is a piece of land. They're not going to come back and say, oh, well, you sold us to this and there's mold, or there's, some of the different things that could happen in a structured type property. When we're looking at land, it is what it is. You can go take a picture of it this year and take a picture of it next year, and except for maybe the tree growth and some shrubs and bushes and weeds or something, it's going to usually look exactly the same. And so when we're talking about land, it's going to be easier to transfer, and a lot of the deals that we're going to be doing with land are going to be cash type deals, or seller financing, or something like that, where you're not going to go through the traditional way of selling a property like you would with a home. In a brand new home buyer is looking for, finds a mortgage broker and then gets a mortgage and goes out and buys a property. With this, they're essentially usually going to be investors, or somebody who's a first-time investor, or wants to invest, or wants to buy that piece of property, and usually we're looking at selling these with at a discount.
Yeah, yeah, I think those are some really good points, and it is there is far less risk that is involved for lots of reasons. Actually, like Steve mentioned, with expectations and different agreements and things that are normal with a home, you don't find those with land. But in addition to that, though, it's cheaper, which automatically reduces your overall risk. You know, the less you pay, the less you're ultimately risking. And uh, also, you know, there are only so many things that could really be wrong with it. It's not something that you're going to get wrong the way you can get it wrong sometimes with a home. In other words, it, anybody, I guess, can misvalue property, but you're more likely to miss something important when there's a much bigger list, a much bigger checklist of things, you know, that you need to look for than there is with land. With land, it's very simple. You really don't have to worry about anything with the land itself. It's not something you have to worry about fixing up or you know, getting a new paint job or something like that. Most of this land doesn't require anything, so that's another major advantage here for it. So what we're essentially talking about is, as far as kind of an overview here of what we're talking about with land investments, we're talking about tax deeds. So we're talking about purchasing property, you know, purchasing land using either online auctions, a live auction, or it could be some form of over-the-counter, you know, meaning that you're going directly to the county and able to get it outside of a tax sale. Any of those are going to work great because there are so many land opportunities in all of them. However, once you're able to identify a property and purchase it, you need to also have an exit strategy that you can employ and that you can use to basically sell that property in a variety of ways, you know, so that you can make your rate of return. And so that's kind of an overview here, but we're going to talk about that all in a little bit more detail here when we're talking about land. This is a quick example here of a property in Washington. It was featured here at a tax sale not too long ago. But we can see some of the details about the property here. If you can't read, I'll read it to you here. It says Washington tax deed. It is a 0.44 acre building lot, which would mean that it is vacant residential, you know, right now. The winning bid on it was about 3,300. You know, it was 3,342, and it has a market value of about 60,000. And we can see this is a kind of a street side image we can see of the property here that maybe the county took, or maybe it was taken from Google Earth, or you know, street side image on Google Earth or something like that. But you can see the general idea. The $3,300 winning bid is roughly 5% of what the property's market value is estimated to be, which means that it ends up being a great purchase. And for that amount, you know, you're able to get a full half-acre lot almost, and that's a pretty good-sized lot. And it appears to be in a place that has been developed, where there are other properties, I'm guessing here, and that you could obviously sell a property like that in.
Yeah, to give a little bit of background on this is actually a cul-de-sac. It's right there at the end of the cul-de-sac. So right here we see the basketball court. To the right of that, there's a home, and this is almost a nice half-acre cul-de-sac lot in Washington State. And this was also purchased through an online auction, meaning that any one of us could have easily purchased this property. You didn't have to go to the auction. This was done through Bid for Assets, you know, and you were still able to pick up an easy property to sell. You know, this was really the only vacant lot in this subdivision. So that means it's really a prime piece of real estate because it's surrounded by other homes. It could easily be sold to the next door neighbor, or sold and put on the market and sold for really a top dollar because of the value in the location.
Yeah, in fact, something to think about in terms of some of the advantages that you have as a tax deed investor, and when it comes to selling land. When you go to offer land like that up in an area, if there are other people that might be trying to sell land, chances are they didn't buy it the way you bought it, and they have a higher expectation. They probably expect to get something closer to full market value. That's their expectation. They're probably going to be disappointed, and it's going to take a long time to try to sell. And eventually they'll reduce their price some, maybe they find a buyer. The situation that you're in as a tax deed investor is totally different. When you're looking at paying 5% for the property, you have every option in the world because nobody can touch you when it comes to price. And that's because you bought it so cheap. Um, that ultimately will give you a ton of power and control, and it creates. You know what? Sorry, my computer just froze up here on me for a second here.
Oh, no problem.
Okay, here, yeah. I'll go ahead. Let's. Oh, this is actually a second one here that we're looking at. It's just a second example. And if you want, Steve, you can go ahead and tell us about this one too.
Yeah, this was actually picked up from one of our members. He picked up 8 properties in Arkansas. This one he purchased for $749. And it's, as you can see, it's a nice building lot, has a value of $40,000. And you can see within the neighborhood on the picture of the right, there's several homes within that neighborhood that are $250,000 homes. So it's a newer neighborhood, a nice neighborhood, in a fully developed lot. And so even at this, where you're picking it up for $749, even if you sold it for $10,000 or $15,000 or $20,000, that would be half price of what the amount that you paid, quite a bit more than that. Half price of even the assessed value. The market value could very well even be higher. But either way, you're looking at a win-win situation, because even if you sold it at 10 grand, your $749 is going to make you an additional $9,000. So with these type of properties, really it's just a win-win situation. This could easily be sold through some of the methods that we're going to talk about later on tonight.
Excellent. Yeah, I like properties like this as well, especially when you can see the examples like we have. Both of these overhead images tell us a story about these properties. And what's interesting is we can see on the right-hand side, I guess on both, you can see that there are property lines in there, but there are different layers to these aerial maps. Counties are all about aerial maps. And what's nice about these aerial maps is you do have so many options. With almost every county that we've seen, you can look at the aerial map in various years. So in other words, you can choose between lots of different years. And sometimes, I was just looking at a county today that had maybe 15 years listed online. You could choose any year you wanted. What's interesting about that is you can learn so much about it from looking at it, how it's changed over years. But I also like these properties. Oh, go ahead.
I was just saying, even within these 2 pictures, we can tell a little bit more information, because we can see that on the picture on the right, if we look to the home rate to the left of that, we can see that it has a $197,000 value, but we don't see any home there. But in the newer photo on the left, this was from the county website, we can see that there's a brand new home under construction right next door. So somebody just recently has built a brand new home right next to the lot that was essentially purchased. So that shows us that somebody just recently purchased a lot there, and all of these homes were built within the last year or 2. So you're looking at a brand new community with the new custom homes that just came in, within the last 6 months or so. There, Shane?
Yeah. Can you hear me now?
Yeah, it's kind of cutting in and out a little bit.
Does it sound okay right now?
Yeah, it sounds good.
Okay. Oh yeah, what I was saying though is I do love properties like this in terms of vacant residential lots where you have properties that are being built, you have a subdivision that is growing slowly, because as long as there are other properties there, I love these because it is essentially new construction area. It's a new construction area, and you're able to pick up one of these lots, which is almost guaranteed to be worth something, because whether it takes 10 years or 20 years or 30 years, eventually all of those lots are going to have houses on them. And so the person that has the ability to pick those up now at a cheap price, can make money on them immediately. You can make money quick, or you could hang on to properties like that, depending on how much you need the capital. But if you can buy a property for dirt cheap that is that has the potential to be worth a lot in the future, and you don't need to get rid of it, sometimes it's not a bad idea just hanging on to things. If, like I said, if you can afford to do it. So yeah, let's talk a little bit about land investments and what we're generally looking for with property. What are some of the things what are some of the first things, I guess, that we look at in terms of a property here? And I think if we were going in terms of order, I would probably switch this around so that the value was first, and then I would look at the size and the zoning, things like that after. But what we're looking at here, when we see property, things that we're looking for are the size, the value, the zoning, the use and accessibility, meaning what the property might be used for and how accessible it is to get. And last would be the exit strategies, for the property, and different ways that you might capitalize on it. So let's talk about some of these and the role that they play as we're looking at land investments. And if you want, Steve, you can go ahead. You can talk about if you want to take this one, or I'll take this one. You can
Sure.
take the next one.
Sure. No, that's great. When we're looking at property, the size is going to be something that determines our investment, because if the property is too small or it's not going to be zoned properly for like a building lot or something like that, it may be unusable or it may be harder to sell. And so for us as investors, we're going to want to avoid properties that are usually less than the slide says, less than a 0.1 of an acre, because depending on the area, and there may be some mobile home lots that are going to be about that size that would be still a good investment, but a lot of times these are going to be properties that are like your small strip of land, your 10 feet by 100-foot strip of land many times can be difficult to sell because you can really only sell it to two parties. You can sell it to the property owner on the left or the property owner on the right, but you're not going to be able to market it to a large group of people. And so when we're looking at property, if we see a property that that's not very large or is very, very small, then it's a property that we're going to want to avoid. Now, that information is not going to be hard to find. What's great is right there in the county information, and you're also going to be able to determine that through the county maps. The county maps, I use the county maps pretty much for every single property that I'm going to do research on. And I'm also going to compare that map to Google Maps. I never trust the Google Maps. I mean, Google Maps is going to be right or pretty close to the location 99% of the time, but the county's going to be able to give you those property lines. And like Shade mentioned earlier, a lot of these maps are interactive maps, and so you're going to be able to add different layers to it and really determine where the lot is located and make sure that it's going to be a proper size for you to be able to turn around and sell it and make a profit on it.
Yeah, in fact, I would say that learning how to use those county maps is really kind of an important part of learning the due diligence process, because a lot of times those maps are tied into so much valuable information that you can really only get in those maps. So yeah, I think it's important for everybody to figure out to learn how to use those county maps.
Yeah, absolutely.
Okay, so next let's talk about the value. Now we already said earlier that there are certain advantages that tax sales offer, specifically tax deeds offer, and that it is the absolute hands-down cheapest way to buy real estate. There's no other, you're never going to find cheaper real estate than you'll find it with tax sales, because it's the only system like this, where the party selling the property has no interest in what it sells for. So now we're looking at lower amounts, and that's going to be ideal, but what we still need to determine when we're looking at a property is exactly what we believe the property is worth. And the only way we're really going to know that is if we have an idea of what the exit strategy is going to be as well. So a lot of these things kind of go hand in hand. But we need to get an idea of what this property, what we believe it to be worth, and different ways that we might capitalize on it. And we need to know those things because we may need to set a maximum bid if we're buying it from the auction. If we're buying it over the counter, then fortunately, the price we see is the price we pay. But if we are looking at having a bid, then we need to have enough information to be able to make a good educated decision here. There are different values that many counties use. You'll see the term assessed value used often, and that's normally talking about the value given to the property by the county assessor. But that's not the only kind of value that you see sometimes. Sometimes you see terms that are related to the appraised value. Sometimes you'll see appraised or estimated value. I don't know if there's any others here. Some counties will use a variety of different ways to value property. What we usually look for is something that's just consistent. So we'll go off of the assessed value if that's what the county provides, and as long as we're using the same assessed value on all the properties we look at. In other words, if we can look at this assessed value and compare it to other properties, then as long as we're comparing apples to apples, essentially. Other things that we look for when we see a property is maybe what the historical value of the property has been. The reason for that is if you own property before, then you know that as property values increase, so do the taxes, that you end up paying. And so if we know what the value of the property, if we know what what the taxes were historically, it will kind of give you an idea of what's happened over the past year with the property value. We can also see from those county records the sales history of the property, so we can get an idea if the property is sold before and what that sales price might have been, which is incredibly valuable when you're trying to figure out the value of something, because there's nothing more valid than having it been sold before. That's always a fallback. And the last thing I'd probably say on this is just the deed to value ratio is also something that we're always looking at whenever we see a property. If you have the ability to see or know what you can pick up the property for. So if it's over the counter and you know that it's going to be just that set amount that is owed, then the only other figure you need to figure out then is what you estimate the property to be worth in order to get the deed to value ratio. But we constantly look at that as well, and that's because ultimately the properties we're looking for, at least the lower that ratio is, the better. So
one thing to kind of quickly add to the property value as well is we're looking at property. If you find a building lot or a property that you're interested in, you're always going to want to check Zillow and Realtor.com for examples of property that's similar for sale, just to get an idea of what the market is. You can also go back, and all real estate sales are public record. So many of the counties are going to have tools that you can go back and see the real estate that's sold over the last 30 days or 60 days or 90 days or whatever, and you can see if there's any property or lots that have sold. So it gives you an idea of the properties that are currently for sale, currently on the market, and that's also going to help when you turn around and list it as well, because you're going to have an idea of what other properties, what's my competition, and how do I list this appropriate where I can get the first buyer. I can get somebody with interest in this property quickly.
Yeah, I think those are some good points here. And we'll talk more about the value as well as we go on here in a minute, because the value is also related to your exit strategy and how that works. We also pay attention to the zoning, or to the way that the property is zoned. If you're not familiar with zoning very well, zoning is essentially how the governments control what the land is used for. It's how they control the use of land. So it's part of how they do urban planning, and each property is given a zoning classification. So we've heard some of these, we hear them again and again, residential, agricultural, commercial, industrial, Um, what are there any others? I know there's got to be more.
Yeah, there's some that are going to be less used. I mean, there's, some are going to be uh, things like, forest land or more of,
Oh,
of,
yeah,
of recreational type of property.
yeah,
And there's some that are going to be a little bit, but usually it's going to be, most of what we're going to see is going to be the first three, in my opinion: residential, commercial, and sometimes we'll see farmland, agriculture, and industrial. But it's usually going to be residential. I would say, I don't know, 70%, 60% residential, maybe 20% commercial, and then some other types split in. And then it may also be like residential, but not necessarily a full building lot. It's more of just like a small residential piece of strip. Then that's kind of the type that would avoid, or a commercial strip or something, unless we can somehow use that property or there's some use to the property.
yeah. Another way that counties go about identifying properties is by whether they are improved or vacant. That's something that you see the counties are good to imply, and that's because if there are improvements, they want to take note of it. And improvements doesn't necessarily mean that there's a house on it. It oftentimes does, but improvements can essentially be anything that has been done to the property to improve it overall. So if there are things there on the property there that have been added, then they could count as improvements. So sometimes you'll be looking at different properties and you'll see one that has it might have some improvements listed. Maybe you go to look at it and it has some type of a shed there or something, or maybe they've who knows? They have different ways there. Lots of different things you could add to a property that would improve the value of it a bit. But yeah, that's one thing that we look at here. Um, in terms of zoning, like Steve mentioned, most of what we're going to see is going to be, either residential or commercial. This one's kind of an interesting one, just because the property wouldn't really have a lot of use or value except for, in this case, or for a billboard space. In fact, it looks like this one actually has a billboard already on it, huh?
Yeah, it's actually a large enough lot that it's zoned residential. And up the street, you can see down the street here, here's a home here, but this lot already has a billboard on it. You can almost see through the county map that 90% or a good portion of that billboard is going to be actually on this property that was purchased for $91. And so, you could contact this person if the billboard is still there, and go ahead and have them start paying you rent, or you could put up a couple of billboards yourself. But this is a big 4-lane U.S. highway here. And so you're talking about, a lot of traffic that you could have a billboard that could be seen from both sides, so people that are driving north or south would be able to see it and put one or two there. And now, you've spent $91 and maybe it cost a few thousand to put up some billboards, but you've got something that's bringing you in residual income every single year, paying itself and essentially making you profit. But the lot is big enough to be zoned residential if somebody wanted to put a home there.
It is interesting. Well, just how often when we're looking at property, a property like that, somebody could put, a home there, but chances are they probably wouldn't, because it's, maybe it's something weird kind of like that because it's like a hill, or maybe, whenever you find lots that are on the side of the road, uh, lots that may not have value. I guess what I'm ultimately saying is that your exit strategy can really play into which properties you might invest in and which you wouldn't. And that's just because, yeah, in a case like this, the person is looking and they obviously can see that there's already a tax deed there, meaning there's already I'm sure they have that probably listed as some type of an improvement on the property. Um, and it sort of makes it a good investment. If you can account for your exit strategy when you're trying to decide which investments, which properties to buy, then you should always be okay, because as long as you know your exit strategy, it'll help you avoid a lot of problem properties. I mean, ultimately, if we're talking about um, trying to minimize risks, if you have the ability to sell property all the time, there really is no risk. Um, I think that selling the property is a big part of the investment process. A lot of times we get so wrapped up here with the buying side of it that we forget the selling side of it.
Yeah, well,
Unfortunately, it's also getting easier.
and with a property like this, it would be pretty easy to even sell it to somebody locally, even if you just wanted to cash out of it, sell it to some local company so that they could put their own billboard on the property. Because of the price that this was picked up, you picked up this property for under $100. It's almost half acre or close to it, maybe a little under, and has this ability to have a billboard. A company would pay, $1,000, $2,000, $3,000, $4,000 to be able to put that up there, own that, and never have to pay a billboard, pay the fee to have a billboard up there. They would just own it. And so you could easily sell this to a local company or somebody that would want to be able to advertise along that road.
Yeah, and starting out at a price of $91 as far as what you have into it, boy, you've got so much room to move there that yeah, there is a lot of options with that property. Um, Another thing that we look at with these properties is what the properties might be used for, which we talked about here just a second ago. We started to get into it, and also how accessible the property is. And what we mean by that is the property landlocked, or is it accessible from public roads? Like this last property we're looking at here. This property is accessible from a public road, but if that road wasn't there, if that was another piece of land and there was no easy way in, it would be landlocked, which can be a problem, mostly because potential buyers, the only way they can get out to the property would be if they cross, another person's property, which can be a problem for people. So yeah, one of the questions here we always want to look for is, is the property landlocked? Is it accessible from a public road? Also, we can see sometimes the shape of the property will tell us a lot. Sometimes we can tell immediately just from the shape of the property and some of the dimensions if we're interested or not, because that will pretty well tell us if it's usable. It tells us whether we're looking at some type of a tiny strip. And like Steve said earlier, something like that is only going to have minimal value, and it will only be valuable to one or two people. I mean, it really makes it difficult, to sell a property like that. So we want to find properties that have a lot of use, and that is one of the things that we're going to be looking for here, is to start to look at different things that the property might be used for, or that it's already being used for. We need to know also if the property has any easements against it, and an easement would go along with its use and its accessibility, I think. An easement is essentially the government reserving the right to use the property for a specific purpose. So drainage ditches are common easements, but there are easements related to all sorts of things like that, all sorts of public services. So we can check to see if there are any easements. It wouldn't necessarily mean the property is bad, but if there's an easement there, you want to know about it before you buy it. In addition to asking, what this property is currently being used for, what it might be used for here in the future, we also need to consider who might want the property. It's good to get an idea of who your best bet is for potential buyers, and that could be, maybe you'll look at the property and you'll determine that your best bet for selling this property is going to be to somebody local here. Maybe that's going to be the best bet, and one of the most effective things you could do in that case would be to try to get a sign on it that says for sale. If it's something that you intend to sell online, you're going to need to get get some good pictures of it, and a good system, a good way to offer that property, get a good system in place for selling land. But you want to have some kind of an idea of who you could be selling it to. in order to I think in order to get a good idea of what the value is ultimately on the property.
Yeah, as you bring up that, exactly who would sell the property on that Arkansas property next to the freeway, with that you could even, you talked about putting up a sign. How effective would it be to put up a big sign there that says, put your billboard here, find out how you can own this property for whatever, and have your phone number there. You have hundreds of people that are driving past that every day. You're going to have somebody that wants that spot, and that may be all you need to do is put up a sign, and then you're going to have buyers calling in asking to buy that piece because you've already given them the idea. When they drive past, they already visualize their billboard for their company sitting there. And I think that would be a property that would be very easy to sell to some local company that would want to be able to use that to put up their billboard so that they get thousands of people looking at that or hundreds of people looking at that every single day that essentially, that see their advertisement.
Yeah, in fact, if you think about it, property sales, it's kind of like murder. They always look for the spouse first. Well, when you're looking at selling property, you do kind of start the same way. You start close. You start with the surrounding neighbors, the people that are going to spend the most time around this property, that will see it most often. Those are the ones that owning it was going to be the most real. It doesn't get any more real than to own the property that you already live at, to own a big chunk of it there. So, um, you know, they may be the first, and we kind of see you spread out from there to focus on the other community, before you start your online type stuff. Or maybe your strategy employs picking up properties that are in between, homes, and that may only have value really to those homeowners primarily. And it's a matter of contacting those individuals to see if they're interested in buying the property. They very well may be interested as well, because you're going to have the ability to offer it for probably far cheaper than what they would think or expect it to cost in order to buy it. And that's because when you buy a property like that, an adjacent property, you are going to be paying very little for it. And ultimately, who the property would be most valuable to is either one of those surrounding homeowners who by purchasing the property would be able to expand the size of their lot. That has a real world impact on the value of their property. In fact, whatever the amount is they might buy a property like that from you for. I mean, let's say they buy a property like that for $1,000, for $1,500. The effect it will have on the value of their property will be greater than that, because they're going from 0.44 acres to 0.72 or whatever it is. That actual increase in the size of the land with their property it means real financial difference to them. What's interesting too is, as we talk about, is a property landlocked? How do they have these things divided? You can see this is an interesting property in Michigan, and I don't know if there's a backstory to this one, but I thought this one was interesting because it's a property that has an entry road, so that it's not landlocked. And there are certain properties that are developed this way, where they'll stagger the properties like that, so that the owners, they're fairly deep properties, and so the properties are able to have a road like this. Is there anything? Is this just one of the examples you found, or just one of our members?
Yeah, all of these examples that we've shown today were actually purchased by our members, and so this was purchased by one of our members, and he picked this up just over the counter, $50. It was actually under $50. I think it was $36. But and he picked it up. I talked with him and showed him how to get the names and addresses of just the neighbors. And so all he did was just send out 3 or 4 letters, and the property owner, one of the adjoining property owners contacted him back, and he worked out a program where he's getting, I think $500 down and $200 a month until the property's paid for. But this was a very quick, easy thing for him to be able to do. Maybe a matter of a couple of hours worth of work, he suddenly has made, $1,300 off of very little work. And not only that, he also went through the experience. And so, this is Shay talked about just contacting, and a lot of times the property is going to sell to the people closest to us. And this is an example of that happening. And so he didn't have to put up any ads or do anything like that. The first thing we had him do was just send out those letters and automatically sold the property that quickly. As we were going through these Arkansas properties as well, one of our members purchased 8 different Arkansas properties, and one of them sold just by somebody contacting him interested in the property. So when we're picking these properties up, we're picking up land for less than 10 cents on the dollar. That's really kind of the mark that I think that me and Shade are looking at, is we want to be able to acquire land for less than 10 cents on the dollar. And so if we're able to do that, even if you sell it for 20 or 30 or 40 or 50% of the market value, you still make a huge return on your profit, and you also sell it quickly. It's a cash sell, or you're acting as the bank and seller financing it.
Yeah, and what's also interesting is the ability to pick it up for less than 10% of market value is reasonable. That's a reasonable expectation because land is so overlooked. It is something that you could absolutely do, and in some cases, yeah, you see properties that people pay even less, than that for, like the 5% we saw just a second ago. And this property, which how amazing is that for under $50, they're able to buy that, put a little bit of time into sending out the letters, but then is able to turn around and sell that for such a real amount. And what's also kind of neat is the way that they financed it, because they offered owner financing on it, which is very flexible and that works well for the person that bought the property. The person that bought the property may not have been able to pay $1,500 all at once, but the fact that as the property owner, he was flexible and willing to offer that owner financing meant all the difference in the world, for the person that bought it, because it gives them the ability to get something they otherwise wouldn't be able to get. And the $1,500 is probably a great price on the property anyway. So all those things are beneficial, and the investor ended up coming out of this. I mean, not only did they get $200, upfront, which quadruples what they had into it, but then they're getting, whatever you said, if it's $100 a month or $200 a month, whatever that is, they're starting to create regular, consistent residual income. How many times would you have to repeat that before you just had checks in the mail constantly? That's the idea, and I think that's what it takes to get rich. To be able to make money in more than one way. But yeah, I think this is a great example here of another one.
Yeah, it's a total win-win. The property owner was able to increase the value of their property by a huge amount. They were able to buy the property for, even the purchase price, they got it for 20 cents on the dollar. The person that's buying it, and the investor, our member, was able to turn around and do a deal, and just like Shade said, just that $500 down, took off a $50 investment. Then he has $200 a month coming in for the next 4 months or 5 months, however long it takes to pay that off. But if for some reason the property owner quit paying, he would just go ahead and re-put it back on the market. So you're really not at risk of losing anything. The way that it's structured is that, that down payment, if they quit making the payments, and then essentially they default, and you haven't transferred the deed to their name in that point until they're done paying, because you're really the bank. You're the one that's holding the deed. And so, the property owner was able to win, the investor was able to win, and really was overall a good experience for everyone.
Yeah, I think that tax sale properties are neat like that, and yeah, because you can find them so cheap, it does leave so many options for being able to sell it. It's nice. It is nice when you find the rare, very, very rare time when everybody wins, in some kind of a purchase or an investment like that. That's not always the case. Now, exit strategies we've mentioned here a couple of different times. but it is such an important part of what you do that it's something you need to be thinking about as you're looking at potential investments. So it is just the way that you intend to make money from your investment, okay? That it is how you plan to monetize this specific investment. So it's also not your overall investment strategy. Your overall investment strategy may be to maybe you're trying to build up your passive income till it's equal with your active working income, and you have the ability to walk away from your job if you want. Maybe that's what your what your goal or what your strategy is, or maybe your strategy is to buy these tax deed properties. But ultimately, though, when it comes to what we're talking about here, this is a specific exit strategy for this property. So, and you may not know, I mean, but you may have, it may just have to be an idea, but you need to know how or what the best way would be to monetize this specific investment in order to get a number about, what you think the property's worth and what you could potentially sell it for. So, yeah, it should be investment specific, something that works for each one. Um, from there, when we're talking about terms, we may have mentioned this briefly last week, but to get an idea of what we mean when we're talking about like flipping properties or short-term real estate or long-term real estate, what we mean by that is to flip a property essentially means, if that's your goal intention, it should happen. It could happen in less than a week. It could take more than a week. We give it 0 to 3 months there because we could still consider that flipping. If you can buy a property and sell it within, a few months there, that's still considered a flip, I think. We consider short term to be something that you're in for under a year. And long term would be something that you're maybe in or planning on being in for over a year. Okay, so yeah, if you want, Steve, we can start talking about, because these are basically all different methods, different selling methods or different strategies here for how you might sell property, and there's probably lots of things even from beyond this, but yeah, we are at a unique point in time right now just because it's so much easier to reach people today than it was 30 years ago. There's so much exposure with the things that we may want to offer. So there's some unique opportunities right now when it comes to selling things.
Yeah, absolutely, and that's what makes this time so great. In addition with that, we can use several different strategies to sell the property. So, I mentioned this last week when we talked about exit strategies. Something I learned from my dad and my uncle being involved in real estate, they've been involved in real estate their whole lives, was nothing sells a property like a for sale sign. And with these type of properties, putting a for sale sign is going to help you to be able to sell it, because you're going to have people that drive past it every day that know people within that area. And so not always will these properties sell to somebody local, especially if you list it online like eBay or something, it may sell to another investor. But that's usually going to be the first step you want to do. Now, we talked about it in the strategy in the last week's webinar, how you you can go ahead and put an ad in Craigslist or classified ad to have somebody go out there and do that for you. Also, a mail campaign. Now, the mail campaign is going to be just to the local neighborhood. So it may be anywhere between 3 to 10 letters. You're usually going to find just the closest people, the adjoining properties across the street, people within that area, and you just send them out a basic form letter explaining that you're essentially selling this property. Here's what you're asking for it. If you're interested, give you a call. Now, in addition to those will be kind of the first two steps, because that's going to be your marketing to the local people. The for sale sign, and then of course the U.S. mail strategy. Now, to market it worldwide, to market it to everyone, then we have a lot of other tools we can use. We can use social media websites. In fact, this week I've joined a few different real estate groups in different areas. So there may be a Facebook page dedicated to Arkansas real estate. I would go and post the for sale in that. You could also use any of the auction websites, Bid for Assets, eBay. Some of these different websites are great ways to be able to offer your property, and on eBay you can even have the opening bid amount, or that bid amount be the down payment, which means that essentially you can sell it as a seller financing option right there on eBay. In addition to that, the classified sites, Craigslist, any type of real estate site, and there's so many different real estate classified websites. Usually many different areas, towns, states, counties are going to have some type of even local classified real estate website. So you're going to want to post that information there as well, or to some of the other larger land sites. Craigslist, you're going to want to market it online so that everyone sees that the property is available. And then last would be that real estate agent or realtor. And that's usually going to be used, we talked about the terminology for flip. So for the flipping, you're going to really use these first strategies. With a real estate agent or a realtor, that's usually going to be more of your year, because you're usually going to go through the quiet title process. Now sometimes you can go ahead and just sell it with a realtor, and it'll be more of a cash sale or an as-is sell, where you're not necessarily getting financing on it. So you can use a realtor in those type of situations, but most of the time, unless that's your strategy, you're going to be using those first ones to get rid of the property quickly, or at least to kind of do the flip strategy.
Yeah, I think with some properties, that may be the best thing to do. What's interesting is that while you may buy a property like that and it may be your strategy to flip it, you could end up selling that property to somebody whose strategy is the exact opposite, and that is they just buy properties like this to put in their land portfolio. And all they do, they may just, it's another aspect of, their investment, but they're able to buy inexpensive pieces of land like this and put them into a portfolio that they can ultimately borrow against because it has X value, it's land. So it's interesting how real estate works and how people can buy for so many different motivations. It always has that inherent value, though, which is part of what makes this all so special. We also have a unique ability with the prices that we can pick the stuff up for in being able to offer seller financing or owner financing. Owner financing is somewhat rare for a lot of things, because when people are paying full price for things like real estate, it might make financial sense in a lot of ways to do owner financing, but they are much more tempted by going through traditional means, making somebody else get financing from their bank and be able to get that in some kind of lump sum amount. Most of the time people aren't willing to do it, but picking them up for this low price gives us that capacity to offer owner financing. And there are a lot of people that wouldn't otherwise buy unless they could somehow get it through owner financing. It's a powerful sales tool, that you can use. So keep that in mind, that you can use seller financing to attract new investors or people that wouldn't otherwise maybe consider trying to buy the property. And you're never at any risk with the property of losing it because you haven't transferred title yet. You don't transfer title until it's paid for. And so that means, like Steve said, if they ever stop paying, you don't have to go through some kind of a repossession process because you've never transferred over the title. That's how easy it is to turn around and resell it if that party fails to continue to pay. So yeah, you're never at any kind of risk with that, and it's an easy way to begin generating regular income. And what's also nice about that is when you're offering something like owner financing and the properties aren't expensive, you're not talking about huge amounts, you can sell it through so many different places. There's so many different places now, like we had a minute ago listed there, things like the classified websites and eBay and these other online auction companies. You can get that property in front of so many people now that you just wouldn't have been able to reach a few years back. And what that means is that there's a unique opportunity right now that hasn't existed that long. And
You
you
know,
can use a seller financing for any kind of property too. It doesn't have to be a home. It doesn't have to be land. You can use for anything.
yeah, with seller financing, one thing you can also do, and you'll also see is the people that are coming to you aren't necessarily mean that they have bad credit. Also, you're acting like the bank, so you decide, is there an interest rate, how much you charge, and if you have somebody that has good credit, you could, or even somebody who doesn't, somebody who seems like that they're going to be a good person, they're giving you the down payment, you can have it no interest. And so there's a lot of different reasons why somebody would prefer seller finance, and they may even have the cash but want to use that cash for something else, and they plan on building a home there in a year, or they want to be able to do this so that they can get eventually build on the home, or a lot of times they'll even look at it as an investment. So if you have somebody who wants to build a home, but they may not be able to build a home for a couple of years, but over the next 2 years they could pay off this building lot, and you're acting like the bank for them, and it's maybe $300 or whatever, how much the price is, you're making that residual income. You're going to find people that are serious about this, I guess is what I'm saying. And if they don't pay it, no problem, you just go ahead and resell it. But you're going to have a lot of people who by putting down that down payment and start paying those monthly payments, they don't want to lose that money. If they quit paying, they're going to lose their down payment and any of their money in that property. So essentially, they're going to be motivated to keep payments coming in until the property is paid for. And you can also get creative as well, saying, okay, if you pay on time for 3 years, I'll go ahead and deed you the property, or 5 years, or however long the loan is. You can give them options where if they make the payments on time, or you go ahead and knock off the price, or you allow them to get the deed within a year early, or whatever it is, because it puts us in the driver's seat. And so we can make these situations a win-win situation with the sellers or the buyers that are buying the properties.
Yeah, absolutely. I think, and in a lot of cases, yeah, I think that we can sell people. Yeah, you can get people that you might not get otherwise. So it opens up a lot of doors. When I was talking about unique opportunities, though, it brought up another thought, and another unique opportunity is something that's kind of unique to our time right now and to the internet, and that is county forgiveness of property taxes, in an effort to get new people in. That's something that I don't know. Maybe counties have always done it, but right now counties are beginning to see the light, I guess you could say. Some counties are beginning to see how beneficial it is to run their tax sales efficiently and to do it well, and how important those property taxes are. I think a lot of counties are beginning to grasp these things, especially as money gets tighter. And so what we've seen is properties that have had delinquent taxes owed on them for years. What happens with properties like that sometimes, and you see them sometimes on a list. In fact, we've seen lots of them on different lists here, throughout the years. You'll be looking through the list and you see generally the same, bid to value ratio, and then suddenly, boom, you see one where it's like 60% or 70%, or maybe the opening bid amount is like twice the amount of what the property's worth. When you see a property like that, yeah, generally what's happened there is, taxes were delinquent, they weren't paid, and really it's kind of an enforcement problem. Nobody really enforced the property tax thing by trying to foreclose on the property, or take the property away, and by the time the county offered it at a sale, nobody bought it, and the rest is kind of history. The county's been sitting on it ever since then. The counties can't afford to have a certain percentage of their properties that they just never collect property taxes on. And so what we're seeing counties do right now is go through the effort to try to take, we've seen counties knocking down old homes that used to be there. So you're talking about lots, they're knocking down the old homes so that they can turn around and they're forgiving whatever the debt was. So they're not passing on that charge, which most of the time, the county would tack on that cost to demo, something on the house. Normally they don't forgive anything, but they would tack that on to that, and whatever else, was owed on the property, and it would never sell. But what we're seeing though is they see, there's such a strong desire for them to get somebody, a new owner of property that will begin to pay the property taxes regularly, that they're essentially willing to forgive whatever the debt was that was owed, which is important because it's the reason why these properties haven't sold. It's because, for a long time there's been something bad with the numbers. So counties like that are willing to drop these properties down to low prices. They might sell those properties for $50, for $100, whatever it is. Anytime you're looking at properties like that you can buy for less than $500, less than $1,000, it's the equivalent of the land giveaway. So there are tons and tons of unique opportunities that we're seeing, today. And in fact, this is kind of another unique one. If you want, you can talk about the land leases. You still there? Can you hear me okay?
Yeah, sorry about that. Yeah, the land lease can be used for all kinds of different things, and it's not something that we've done ourselves. It's something that we plan on doing this year. And a lot of times with tax sale investing, we're going to find different types of properties where it's fishing or hunting or recreational or boating or even mining type of properties. And something we're going to be trying this year is actually leasing out the rights to the property, leasing out the recreational rights. So somebody can use that property as their year-round campground or their hunting area, and you're essentially still own the property, but you're just leasing out the rights to use the property for that specific person. This allows us to be able to earn residual income. So we're going to be making yearly income off of that property, which is going to pay the property taxes, but also is also going to be putting money in our pockets. But in addition to that, we're also going to be still owning the land. We still own the land, and as that land increases in value each year, we're going to be making that money as well. And so, the land lease is kind of a strategy if you really like that property and like to sit on it, but instead of just sitting on it and essentially losing money in a way by paying property taxes on it each year. This gives them the opportunity to be able to lease that property out, bring in residual income off the property, but then still own all of the rights and own the property itself.
It's another big option too if you're dealing with agricultural areas and you find piece of land that can be used for agricultural purposes, because farmers have been leasing land to grow on for a long time. There are so many different uses you could have it could be things like recreation, or like Steve mentioned, also the mining, the mineral rights. There are so many different things that land might be leased out to somebody for. In fact, you might find many times we've come across a property in the over-the-counter list that maybe it looks like it's the strip between a bunch of different properties, but it turns out that what you're actually buying is the lot of land that everybody uses. It's like the driveway, the equivalent of the driveway. Well, if you buy that driveway right there, everybody has a need of it. So that the property has actual real use and value there, and you shouldn't have a problem turning around and being able to sell it. But things like that, and knowing what your options are going into it, will help direct you to those properties that are going to be most profitable for you. And really, we've covered a lot of different things you can do with land. Like I said, I think this is the best secret in real estate right now, is just raw land investments, because it's so affordable and profitable. There's just not that many ways you can buy property for under $1,000. In fact, I don't know of any other way you can buy property for under $1,000. And so, if you're able to buy it for this little of a price, you're basically able to take you're pulling that out of nothing. Really, you're able to start generating money. You're able to create a little cash machine, just pulling that out of thin air when you buy a property for a really low price. So, yeah, I think there are some unique opportunities right now. It's also, if you just need to get started,
go and buy a $50 or $100, it could be a lien or a deed. If you're buying a tax deed, I mean, ultimately, your ultimate risk is only what you put into it. So if you pay $50 or $100, then that's ultimately what your risk is. In other words, just going through the motions for that amount would be worth it. But chances are, even just based on what you've learned and what you know now, you can make a good investment. Even if it's a small investment, you can find a good one. There are lots of cheap properties that are good investments. You don't have to spend a lot to buy really good investments.
No, and there's opportunities all across the country. I mean, that's that's the thing. I mean, we showed 3 different states this evening. Michigan, one in Washington, and then also Arkansas. But you can do this strategy anywhere. Next month there's a California resale where the bidding starts at $100 to $250. There's opportunities in Florida. There's opportunities in all these different states for us to go out there and pick up these properties for 10 cents or less on the dollar and be able to turn around and sell them and make profit. Shay talked about the land lease. Farmland could be its own strategy. You could focus on farmland and essentially get an idea of what it rents for and how much it costs to lease. Farmers pay incredible amounts of money to be able to farm to lease farmland, and so that may be a strategy that you can pursue, and you can go out there and repeat it. But just like Shade said, getting started is really the first step. I mean, that when one of our members purchased this property because it's how it's done, and you can just go out there and repeat that process over and over again until you essentially have the income coming in you want. And you can go out there and do lump sums. You can start building that residual income through some of these different things that we've talked about, like seller financing and land leasing and some of these different options where it's not just flipping property. You can make residual income off of land. So it really opens up our strategies and the possibilities when it comes to the different ways we can make money through purchasing land.
Yeah, I think the reality is if you have $100 to your name and you are one of our members, you have all of the tools and resources you need to start investing, to become a full-fledged real estate investor, and you can do that by picking up properties, like this that you can turn around and make a killing on. You can make a really good profit on. So we're here for you. You could start off if you wanted by looking at different tax deed sales coming up. You could look at over-the-counter lists, if you wanted. There's so many different directions you could go in looking, because like we said, when it comes to land, everybody has land. Land is so common, that if you're just looking for land, you can find land for sale in so many different counties, and you can find it over the counter. So there's tons and tons of opportunities out there, but it is important. You have to take that initial step. You have to buy something, and once you go through that process and you buy it, it's no longer unfamiliar to you. That's part of the reason why I think it's hard for some people to take that initial action, to take that first step, is because they're stepping off into the unknown. They don't really know what's going to happen because they've never done it before. But that all goes away once you've been through it once. It's never scary like that, the second time around, because you know exactly what to expect. So the easiest way to alleviate or to get rid of that fear of the unknown is to no longer allow it to be unknown. It's to experience it and figure out what it is. So, with that being said, I think we've already run a little bit late here. We'll get a replay of this available and ready on the website. We're also always here for you to help. If you want us to look at properties, I mean, if you're ready to buy one of these, a piece of land for a few $100 and you want us to look at it, please, if you're about to buy something, email us, contact us, and have us look at it too. We can look at it and give you some reassurance there, or tell you to look for something else. we want to be here to help you with that process. And keep in mind, we've got members that are buying stuff all the time. Okay, so there is a lot of success to be had here, and it is the perfect time to get involved with tax. There literally has never been a better time, to get involved. This is even better getting involved right now than it was maybe, getting involved when Steve and I got involved, 20 years ago, roughly, because at that point, so many of the things that we kind of learned back then are irrelevant now. They just don't really matter anymore. Right now, the systems are somewhat in place, and the future of tax sales is online. So if you can start right now, you can already see that and be one of the few. So everybody have a wonderful night. We again just appreciate you coming out.
Absolutely. You guys have a great night, and we'll talk to you again next week.
All right, we'll see everybody next week.